All right, let's get right into it. Welcome to today's Explainer, where we're unpacking a concept that, frankly, promises to completely shift the way you look at the financial markets. Today, we are talking about outsmarting the market whales by adopting what we call the Hawkeye methodology. This isn't about throwing 100 different variables at a wall just hoping something sticks. No, this is about discovering how to trade with absolute elite sniper precision. We're going to explore the profound clarity of something known as the naked chart. So, be honest, does your chart look like a toddler got hold of a pack of neon markers? If you're sitting there nodding your head, hey, don't sweat it, you are absolutely not alone. For so many traders, their setup isn't really an analytical tool. It's basically a chaotic battlefield. It's completely covered in overlapping trend lines, a half dozen complex oscillators crammed at the bottom, and this tangled web of moving averages just crossing all over the place. It's visually exhausting, right? You're out there trying to process a dozen different flashing neon colors all at once just to figure out what a single asset is even doing. But think about it. What does all that visual clutter actually lead to in practice? Well, it leads to conflicting signals. You've got one indicator telling you to buy while another is literally screaming at you to sell. And that hesitation, it results in a frustratingly late entry and ultimately, another loss. Now, what's really wild about this is that this chaotic mess is exactly what the market whales, the big institutional players, want retail traders to deal with. They absolutely thrive on the average trader being confused, overwhelmed, and delayed by this constant barrage of noisy info. It's perfectly designed to keep the retail crowd consistently one step behind. So, the crucial question is, how do we actually fix this? We wipe the slate entirely clean with the naked chart. I mean trading using only Japanese candlesticks and pure price action, set against a completely clear, dark background. At Hawkeye, the philosophy is brutally simple. Indicators tell you what happened in the past, but price action alone tells you exactly what is happening right now. By stripping away all those lagging mathematical formulas, we reveal the true battlefield. We expose the real-time market movements exactly as they happen. Now, we've got to swallow a pretty harsh reality check here. Ready? You become the liquidity that market makers use to exit with their profits. Ouch. It is a tough pill, but it is so vital to understand. Just think about market fakeouts and liquidity grabs for a second. Most retail traders rely heavily on those lagging indicators we were just talking about deleting. By the time that complex, slow-moving indicator finally flashes a green entry signal, the strong institutional move, it's actually already over. Because you entered late, you essentially turn into the bait. You become the exact exit liquidity that the big players need to cash out their own winning positions. To fix this, you need a major shift in mindset. On one side, you have your typical retail trader relying on lagging indicators, which, when you really think about it, they're essentially just historical guessing machines. But on the other side, that's the sniper's approach. They track real footprints. A sniper doesn't guess. They aren't trying to predict the market based on what some average did 3 weeks ago. Instead, they're looking for the actual physical footprints left in the market by the big players. And what are those footprints exactly? They're the strong, undeniable momentum candles and the specific zones where the price aggressively rejected a certain level. That right there is where the real story of supply and demand is being told. So, to track those institutional footprints, you really have to know exactly what to look for. Enter supply and demand zones. Supply zones act as your resistance ceilings, while demand zones act as your support floors. But, and this is a critical distinction you need to take away from this explainer, these are not just your standard everyday support and resistance lines, where the price gently bounced a few times. No way. These are highly specific areas from which the price previously launched with unusual explosive force. Recognizing these zones of extreme institutional interest is exactly how you prepare to set up your own highly calculated market ambush. Okay, so how do we actually set this sniper's ambush? Well, we've got 4 strict steps to clean up your trading process. Step 1 is time frame filtering. You want to open up the higher time frame, specifically the daily or the 4-hour chart. This lets you identify the overarching market structure and, most importantly, filter out all that chaotic, meaningless noise you see on the 5-minute or 15-minute charts. Step 2, identify your kill zones. You scan that nice, clean chart for those high-force supply and demand areas we just defined. Step 3, and man, this is where so many traders fail. Avoid no man's land. Never ever chase the price when it's just floating in the middle between zones. You literally must wait for the price to come to you, to reach your predetermined zone. And finally, step 4, pending limit orders. Always use limit orders at your zones. You place your order, strictly define your stop loss to protect your capital, and then here's the real magic key. You disconnect from the screen completely. Literally close the laptop. It absolutely kills the emotional interference that ruins so many perfectly good setups. Honestly, executing this Hawkeye strategy effectively boils down to three core traits: precision, patience, and strict discipline. Trading with a naked chart really requires this sort of deadly patience. You have to just accept that you aren't going to be executing a trade every single day. And honestly, that's exactly the point. You're waiting for the absolute perfect alignment. But when you do finally strike, armed with these three traits, you drastically increase your chances of hitting the target directly. It really is the ultimate exercise in quality over quantity. Which brings us to a really exciting question to wrap things up for today. Are you ready to apply these exact coordinates to the gold chart? Because in our next explainer, we're taking these precise Hawkeye rules, these 4 strict steps, and applying them literally to the XAUSD chart to extract next week's potential trades. So make sure to activate our channel's radar. Hit subscribe, ring that bell so you receive those market coordinates the very second they drop. Until then, I want you to ask yourself something. When you open up your charts tomorrow morning, will you be trading the market's true reality, or are you still just trading the noise?